Yeah, that's a rather crucial question. Look, the long-term history of OPEC and the oil market is very clear. For OPEC to do its role effectively, it needs a minimum amount of market share. Because if you don't have a minimum amount of market share, you can't really control the oil market. And arguably, without Russia, the aggregate market share of OPEC Plus would be too small. I would suspect that the OPEC Plus group needs Russia to have sufficient clout in the oil market. So in that sense, pure from a market share perspective and the ability to influence the oil market, Russia needs to be part of this group. But then if it's important that Russia stays in, there are always tensions in terms of relative market share between the main players within OPEC Plus. So Russia will be looking at how much market share Saudi Arabia is grabbing, and Saudi Arabia will be looking at how much market share Russia will be grabbing, and that in a way influences the dynamic within the group, and to a certain extent limits its ability to to be effective.
That makes complete sense. Where is OPEC in terms of its capacity at this point in time?
Oh, I think it's getting very slim. Frankly, I think also this recognition is sort of permeating through the market. Saudi Arabia has spare capacity; they have some. The UAE has some spare capacity. Outside of that, it is almost non-existent. So we're getting to levels of spare capacity that are becoming historically small, but they are also unusually concentrated in just two countries. I think this is one of the long-term supporting factors for the oil market. To rebuild spare capacity, we need investment that is forthcoming to an extent, but only slowly. I think this issue of spare capacity, it may not seem overly important at the moment when sort of global demand is cooling down and we're all worried about recession. But if we run into a disruption, which happens fairly regularly in the oil market, all of a sudden, we will come to realize this very quickly.
And I did think it was a terrific outing on the channel by Al Gayes, as he spoke about the lack of investment, and he was pointing out to even refining capacity in the sector. What do you think this means as we look into the future, but we have a large investment population that is concerned now about the implications of energy transition? Do you see the funds forthcoming at any point in the cycle now to try and ensure there is some resilience still in traditional energy markets?
Well, I think this will be an issue that will be with us for some time to come. Look, even the most sort of hard-nosed sort of oil people will look into the future and recognize that the long term looks a bit more uncertain than it did in the past. Inevitably, investments in oil are made with the long term in mind. If you invest now, you need to take a view on oil demand in the second half of the decade and into the 2030s. And over that type of time frame, it is simply uncertain. So even those who recognize there will be oil consumption for some time to come are taking a more cautious view. And I have to say, what we are currently hearing, at least from publicly listed oil companies who just went through 2Q earnings, is that there is still a very, very modest investment response to these high prices and tight markets. This is a very unusual cycle from that perspective. I would worry that the amount of investment, although it is rising a bit, there's also a lot of inflationary pressures. I would worry that the investment levels will ultimately turn out to be insufficient to have a comfortable oil market in the long run.